Welcome to Dental Unscripted, where Mike Dinsio and Paula Quinn break down the practice ownership journey, one episode at a time. Starting up, buying, and running a successful dental practice.
Hello. Welcome back to another episode of Dental Unscripted. My name's Michael Dinsio, and of course I have my co-pilot, Paula Quinn. We are doing another podcast today, and I'm very excited about today's speaker or expert. I'm going to clear my throat all of a sudden. And so I know, exactly. It's like, I don't know what happened there, but we're breaking all things down today on personal insurance, and this is like a very big topic for our clients that are doing startups, acquisitions, and I just think it needs a little bit of a hard press, because the environment where lenders used to require this stuff, they're starting to get more and more relaxed about their requirements for the loan, but the truth is you need this stuff whether the bank's requiring it or not. And so I think that today's topic is fitting, and we have the pleasure of interviewing and talking to Stephanie Pearson, the co-founder of this group, Pearson Ravitz, which is part of Earned Wealth group. And she is all things life, business overhead, and personal disability. And I know you guys hear about this stuff in college and all the things, but it becomes way more important as we approach a dental acquisition. So Stephanie, welcome to the show. How you doing?
Hi, nice to meet you. Thanks for having me.
Yeah, of course. So give us just this quick little, your story and the company, and, how you guys got to where you're at today. We just love to hear a little bit more about you before we get into the nerdy details of disability insurance.
No. Listen, if you would have told me 10 years ago this is where I'd be, I would have thought you were nuts. I am actually an OBGYN by training, and unfortunately I was kicked in the shoulder during a difficult patient delivery, and she destroyed my shoulder and my career. I had a torn labrum. It didn't heal. I developed a frozen shoulder. I had surgery. It did not go as well as planned, and I have considerable range of motion deficits and nerve damage in my left arm, and I was never cleared to operate or do obstetrics, and I actually got terminated the day that my FMLA was up because my contract said I needed to be able to do 100% of my job duties. And I learned a lot the hard way about disability and life insurance, and I became very passionate about the topic, because quite honestly, I didn't want what happened to me to happen to any of my colleagues. And so I started really just sharing my story and the mistakes that I made, and folks started asking for my help. And so I figured maybe this is what I'm supposed to be doing next. And so really started focusing on disability insurance, in which business overhead fits into that category, and realizing that a lot of dentists and physicians that I was speaking to, while they not only didn't have disability insurance, they also didn't have life insurance. And so it became kind of a package deal that if I'm speaking to you about one, I might as well be speaking to you about both.
Yeah, I think that's perfect. And your story is super impactful, and I think is really cool. I know Paula just had a friend who went through a short-term situation, and my goodness, if he had not had insurance, who knows where his company would be right now. And Stephanie, I've heard a statistic, a percentage of folks that actually apply for disability insurance, and it's quite high. Have you heard of any statistics out there where it's a pretty common one to press on, right?
The numbers that get thrown around a lot, and they may be a little bit misleading because it's looking at all, it's not breaking out dentist, physician, but the comment that you'll hear over and over again is that 1 in 4 20-year-olds will apply for disability insurance at some point during their career. I think that might be a little high for kind of the doctor space, and I'm including all docs.
Yeah.
But there's also interesting data that shows that we essentially have the same risks as your typical construction worker.
Oh, wow.
People don't think about it, but think about how many weird body positions dentists put themselves in, right? They're bent over, their fine motor skills, and it's not uncommon for dentists to go out on claim.
Wow. Well, Paula's a hygienist, so she can talk about all those weird angles for sure.
You know, your neck, your shoulders, your back.
Oh, I have it.
Right?
Yeah. But it is a pretty high percentage of claims, right? Is that just short-term disability that I'm speaking about, or am I talking about long-term?
You're talking about all.
Wow.
So the 1 in 4 is looking at all claims over employment time.
Wow. That's crazy.
It's hard for insurance companies to give you real data because they'll say it's proprietary, but most of the actuarial data coming out will say that there are more short-term claims than long-term claims. A lot of that really has to do with women making babies. Normal pregnancy leave is typically not covered by long-term disability. It's not really a disability.
Yeah.
But a lot of short-term disability policies will cover normal maternity leave.
Got it.
So tell me a little bit about, because one of the things my friend did run across is, and it's probably the type you pick, or maybe he had long-term and not short-term, but there's like you have to be out for like 90 days before it will even kick in. Is that normal? Or do you just have to add something to protect yourself quicker?
So 90 days is the most commonly used waiting period for long-term disability insurance because most short-term will cover you for that 90 days. And most people will have one or more of the following in place to kind of safeguard. They'll either have a short-term benefit through work, they'll have an accrual of PTO, and or they'll have an emergency fund. And I'm a big fan of emergency funds. I think everyone should have money working for themselves, not for an insurance company.
Yeah.
But
so you're saying like if I'm an owner and I have long-term disability, the best safeguard is just have some savings to protect myself.
That's the best way.
But the second way would be get a short-term in addition to my long-term so that,
you want to look at what the cost. I will tell you that a lot of private short-term disability policies are really expensive, and I actually don't recommend them regularly. I really do recommend having that savings. And truthfully, all high earners should really have more than 3 months saved. I tell people to try to go for 6 to 12, realizing, early in your career that may not seem doable, but over time it will. Now, if I'm speaking to a woman who knows that she's about to family plan, different story. The one thing that I always say about disability insurance, it is not a one size fits all.
That's interesting. So I mean, if I think it's good to bank in my head because I'm having financial plans with all of our clients, and I usually kind of like coach them towards 2 months of like an emergency fund, but it sounds like I need to bump that to 3 months minimum.
I would.
yeah. I mean, it's hard to hold on to so much cash, but in a situation,
it doesn't have to be immediately liquid. It just has to be somewhat easily accessible. I mean, most people, even if it's in a mutual fund or a brokerage account, you can get access to your money in a short order. So I would agree with you. I don't necessarily think you need to have a ton sitting in a bank account that's not making you any money.
Yeah, exactly. Well, we don't want to step on the financial advisor's toes with that conversation, so we'll pivot back to insurance. Okay, so like I'm always talking to our clients about like, okay, man, like you're buying a practice, now you have bigger responsibilities. Your family, of course, has always depended on you, but now you've got employees that are depending on you, patients depending on you, loans that need to be debt serviced, all the things. And so let's just start with disability in general and kind of work our way down to business overhead and how those kind of play with each other to cover you in the different scenarios. I'd say it the way I would say it, but I'd rather you say it how you'd say it. So but I did hear a third, and that's short term. So it's almost like a short term, long term, and a business overhead makes sense for disability. Am I hearing that right?
No, you're hearing it right. Again, I don't typically recommend buying a private short-term policy. Now, there's an element with a practice owner, if they have enough employees, that they could create a group product that would cover them and their employees, which is a little bit different. Group benefits and private benefits. Some of the language is a little bit different.
Somebody's getting fancy now.
Right. Sorry. But
no, I'm kidding. I'm kidding.
You know, and so sometimes we will talk about group policies.
Yeah.
When we're looking at, if we're really focusing on the owner, right? Personal disability insurance is going to cover their income, right? And truthfully, their biggest asset is their ability to make money over the course of their career.
Yes.
So that's going to cover them. And they want to make sure that it has the right language, that it's truly specialty specific, that they're covered for what they do day in and day out. And if they can't do that, they would be considered disabled regardless if they're employed in another occupation. And so they'll also see that if they're a general dentist, it's a little bit different than if they're a specialist. So pricing changes. With business overhead, you're actually protecting your business. It doesn't cover your income because that's what private individual disability is going to do, but it's going to cover those costs to keep the doors open. Now, if you're a single practitioner and if something happened to you, you would walk away, you might not need it, right? I'm a big believer of just because we can do something doesn't mean it's always the right thing to do. But if you're responsible for a 5 or 10 year lease, if you're going to hire people to cover for you, if you have other dentists in the practice that are going to, protect keeping the doors open, you have equipment that you may have leased, right? There are all these other costs that go into running a business. And that's what the business overhead is in place to do. And so it allows you to keep your doors open.
So the business overhead will cover everybody else's salary or hourly wage. It's just not yours. Now, is there typically a waiting period on that as well?
Yes. And that can be anywhere from a month to a couple of months. So that is a little bit different.
Because a month 90 days can really mess somebody up if they don't.
Yeah, it's a lot of money. It's a lot of overhead.
Yes. Usually for business overhead, we'll recommend 30 days.
Okay.
Yeah.
They don't really go much shorter than that.
Okay.
So back to that cash savings of 2 months of overhead, but I heard you say that it does cover the associate doctor, dentist.
It'll cover associate incomes. It'll cover equipment, it'll cover leases, and then they have a line by line item
like utilities, like any expenses that.
What about loan payments?
So it'll cover certain loan payments. Typically for business overhead, you can get up to 3 loans covered. There is a maximum amount, and of course right now my menopausal brain is kicking in and I can't think of what the cap is, but there is a cap. It's not like we can cover people for unlimited amounts.
Okay.
And then you're also, for leases, it covers that, but that's another place where you were bringing up bank issues. Most bank loans, you do need a life insurance piece to cover.
It's
a little
interesting.
different.
Over $1 million, banks are absolutely requiring that. It seems like they've been a little less aggressive, I suppose, or less needy on loans less than $1 million. And it just depends on which bank you're talking about too. So I've seen it kind of have some thresholds of when they would need certain things and not. So, but I do want to make sure that we're pinning this in our minds. So the normal, the big practice loan, the big one, the one that they're buying the practice for, that could be covered under business overhead insurance. Yes. And personal disability, although that loan is technically a personal loan, technically, it can be covered under business overhead. That's great, because I do know that personal disability is much more expensive than business overhead. Is that true?
Yes.
Okay. Can you walk us through kind of pricing on, not like what's it going to cost, but just the fact that I know that, but are we talking about a third, a half, or dramatically more?
So that's really hard to pinpoint, and I'll tell you why.
Okay.
There are so many factors that go into the pricing of a private individual policy. Are you a boy? Are you a girl? How old are you? What kind of dentist are you? What state do you practice in? Right? So it's so hard to be able to do that. I will say that women are paying about twice as much as men are for disability insurance.
Interesting.
The business overhead, I'd like to say it's about half of a private disability, but I don't want to, set myself up to the stakes on that one.
It's a dramatically less.
It is a dramatically lower cost.
Yeah. And personal disability is the most expensive policy that you're probably going to be looking at as a new practice owner.
Yes.
Now, another question about disability, and that's this is the one that takes the longest too, right? Or is it the life insurance policy that takes the longest? And we're going to get to life, I know, here in a second. But like, if we're going to be late on closing, isn't it usually disability insurance?
I had something that held I was applying for everything, and I remember I was about to close, and it was like we were still waiting on a particular policy. Like, come on, let's.
I could be wrong, but I've never heard of a disability insurance policy holding up a closing.
Okay, so
I have heard of life holding up a closing because of the banknotes.
Yeah. Which one's the blood sample?
It depends.
Okay.
So both now, because a lot of companies in the insurance space are trying to go to a bloodless and fluidless underwriting, they will often depend on how much you're asking for. And so a lot of the disability insurance companies now, if your ask is for less than $10,000 a month, you usually can forego any fluids. A lot of life insurance companies now will get you up to 3 to 5 million. There's a couple that'll go higher than that without fluids.
Okay, so that's a pretty big policy for no fluids. Now, this is probably the last question, just for time purposes.
Well, I have one, and you're just not letting me ask any.
Well, no, on disability specifically, it's like, how much do you ask for? What's your general role?
So again, unfortunately, it's going to be it depends. So for there's 5 traditional carriers that'll give us the language that we really want. Most of them, if you're a dental resident, you can qualify for $4,000 a month in benefit. If you are new to practice, we can usually get you $5,000 to $6,000. All of those are without the carrier looking at how much money you make.
Okay. So in theory, what I heard you say is, somewhere around $5,000 you could kind of lay up into fairly easily.
Correct. And then outside of that time zone, the way that the carriers will dictate how much you get, so this is for owners and their dentist employees, it looks at how much money do you make, what group benefits, if any, do you have, because some of these bigger dental practices will also create group disability policies for their employees. And then the carriers spit out a number. It's all based on internal algorithms. So it's not like you can say to me, Steph, I want $15,000 a month in benefit. I'm willing to pay for it. If the math doesn't work, the math doesn't work. The carriers dictate all of that.
Got it. And like, okay, so like philosophically, I have now a practice loan and a business and a personal life, and hopefully a personal a life outside of my business. And so something happens to me, I got to pay my mortgage and all my personal stuff. I also need to pay my obligations at work, all that. So like,
that's why you need both.
I was just going to say, so like the personal disability policy you should think of it as covering
your family,
your personal situation.
Thank you, Paula.
I got that. But like some people, ladies, some people use it to cover their business loan if they don't have business overhead insurance. So there is a
and then they have less for their family.
So
now we see where you're going. But.
So you guys didn't let me get it out before you started making fun of me. So what is like the most appropriate structure then? I mean, personal disability, business overhead, and then you're covered in all ways, or
yes,
that's the right way to do it.
That's the right way to do it.
Okay. And then from a business overhead perspective, you guys are looking probably at the profit and loss, so that the client would need that. Yeah.
Correct. The carriers will ask for your profit and loss statements usually for 2 years. And then again, they're going to tell us what you qualify for or not. Those participation limits are much higher. We can get much more coverage and business overhead than we can for a personal policy.
Got it. Paula, what was that question? Did you forget about it?
Yeah, correct.
Okay. So like the more money you make, the more you're going to want to be covered for, but at the same time, you can't always get that much. Do you run into that conversation a lot with your clients?
We do. Thankfully, not too much, just because of the way the algorithms work out. But every carrier does have a maximum, what they call participation limit. And so you can only get X dollars from one policy. And there's a misconception kind of floating around that I hear a lot, that we should be able to get 60% of our incomes covered. The goal is to try to get to that 60-70% mark. But interestingly enough, the super high earners actually get penalized because, as I mentioned, they're only going to give you up to a certain amount. So if the more you make, it turns out kind of the less we can actually get covered. But then you're looking into what we call the non-traditional carriers. So like the Lloyd's of London and other carriers like that, where they cover the very wealthy and the hard to insure. So that's kind of how they risk mitigate. So it's not that I shouldn't speak in definitives. I don't think that I have ever had somebody that I couldn't adequately cover. It just may be in different buckets with different designs.
Got it. That makes total sense. Okay. Perfect. I think unless there's anything else, disability. Yeah.
Oh, you're going on to life.
No. Yeah. What else? Yeah.
No, are you going on to life? Is that where you're going?
Yeah. I was gonna pivot to life. Yeah.
I was gonna say just one quick. Make sure that when you're looking at your private individual policies, that they have all of the riders that you need. So it's not just the base benefit. You're also looking for inflation protection, catastrophic protection. Words are hard sometimes. And if something happens to you where you have to go part-time, they do have coverage options for that as well. So there are a lot of pieces that go into a proper plan, and you want to make sure that you're speaking to somebody who's going to take you through all of those pieces.
Speaking of which, this is why it makes sense to talk to a group like yours that has multiple choices and
Yes.
Is a broker.
Yes.
Not just one carrier. And
Correct.
Anything that you want to add to that comment other than that itself? Brokers have more options, right?
Brokers have more options.
Yeah. Okay. Pivoting to life. So life insurance, again, sometimes a condition of the loan, sometimes not. But like, I always question why my clients question getting another life insurance policy. And for me, it's interesting, like you got to protect your family, of course, with a life insurance policy. But then now you have this business, and I usually run them through the scenario of like, God forbid something happens. And Paul and I had to deal with this. And immediately it's a fire sale on the practice, and the practice is depreciating very quickly. And when a buyer hears it's a death, they love to try to work the price down and say that there's no goodwill and employees might be leaving, and it's just a hot mess. And so sure, professionals like us and brokers can get that thing up and sell it quickly and all the things. But having a life insurance policy covers you from probably the worst case scenario. So that's kind of my pitch. Stephanie, do you have a better one or
No,
like our strategy?
That's pretty much mine. I mean, look, the bank is going to get their money back, and they don't care who they're getting it from.
Right.
And if you have a personal loan, it's your estate. It's not even protecting necessarily the business. That's also protecting your family.
Yeah.
Right? If you're saying, why get that extra one? Well, if you don't get that extra one, the bank's going to come after your estate. So you think you're taking care of your partner and your children, and they could lose a big chunk of what you had intended on being there for them to cover that loan. Right. I mean, to me, it's a no-brainer. And that's not just me because I can sell it. I mean, that just makes sense.
Yeah, it does. And the fact that life insurance is by and large a pretty economical term, it does feel like a no-brainer. So strategies on life insurance, is that like a situation where you would do it for the term of the loan, or would you do it longer? Like what are your strategies as you approach life insurance specifically?
So again, it's going to depend on whether it's personal or for the business. I mean, the business is real easy. It's the term of the loan, right? Mm-hmm. Most bank notes are 5 to 10 years. So you want to get a policy that's going to cover the bank note, right? Like that, again, there's no special sauce to that one. When we're talking about personal, it gets a little messier. There are super complicated calculators out there that take into account everything from income to the average cost of a funeral where you live. I'm kind of a keep it simple, stupid person, right? You've heard of that. And if you talk to a bunch of financial people, I have found that you hear two paradigms kind of over and over and over again for high earners. Is you should either have $1 million a child or 10 to 15 times your income and then roll in debt that wouldn't die with you. So mortgages, small business loans, educational private debt that somebody had to co-sign. And I will often tell people, check with your lender. A lot of educational loans are forgiven upon death, but some of them aren't. And you don't want to have that sneak up on you. And then I talk in ranges, and I say to people, there really is no right number. It's what you and your partner discuss on sexy Friday night dinner talk about how comfortable are you going to bed at night, getting behind the wheel of your car, and your sweet spot's usually somewhere in the middle. And then it also depends. Is it a dual income household? Is it a one income household, right? What are their plans for the future, right? We might be able to talk, oh, I have one child now, but I then say, if life were fair and you got everything you wanted, how many kids do you want, right? And kind of plan that way. So again,
because
I
insurance
hate saying it
is more
depends.
expensive as you get older. So
Correct.
Yeah.
Correct.
What about whole versus term when it comes to just individual? I know I'm probably opening up a can of worms, but
No, it's good.
now we're not talking, do you still look at it as like, for instance, my kids are older. Michael and I have talked about this before. He's like, we don't have to worry about them, but I do, I don't like, number one, I'll be leaving some debt behind, I'm sure. Number two, you want to, if you want to leave something, so what do you usually recommend? I mean, it's probably different as you're younger, like you said, in your family planning, and it looks a little bit different versus as you get older, but just kind of rule of thumb on term versus whole.
So again, this is my humble opinion because I'm going to piss off a lot of people.
Okay.
When
we do that on here.
It's called unscripted for a reason.
When I talk to young people having early family planning, early career, personally, I think term is all you need. If you think about why do you want your life insurance? What's the purpose of your life insurance, right? For most young people, it's raising our kids, getting them out of the house, and getting them educated. So that's a finite period of time.
Yeah.
And term is so much less expensive that to me, it makes sense that that's all I talk about. For me, and I will tell you, a lot of dentists and physicians are kind of hardwired. We're indoctrinated from an early time that permanent life insurance is the devil. I don't think it's the devil. I think that there's a time and a place. I think it is incredibly useful for super high earners who may need the estate tax help. It may be useful when the kids are out of the house because you shouldn't need as much, right? Like if I'm telling you, you should have, and I'm pulling a number out of the sky, right? You should have $5 million in life insurance while your kids are at home. Well, once they're out of the house, you're not really going to need $5 million in coverage. But at that point, you might want a definitive death benefit. As long as I pay my premium, that death benefit's going to be there the day I die. That's when I start talking to people. The other thing is I really like convertible term. So there's term life insurance that will give you the opportunity before the end of the term to take a piece of it and convert it to a permanent product. And they have to give it to you at the health class you got the term at. So for folks, right, we're not getting healthier. We're just not. We're getting older. We're getting sicker. And this is like the salesiest thing I ever say, and I just can't think of a better way to say it, but it guarantees your future insurability. So God forbid something horrible happens to you in that 20-year term, in that 30-year term, where you might find
premium isn't going to skyrocket, or worse, you're not
going to be denied. Correct. So I'm a big fan of convertible term. It's only a little bit more expensive than the straight term.
And do you lose much of the value on that conversion? How do they do that? Like if I'm covered for $2 million and it's got a convertible part to it,
it's a completely separate entity because most people aren't going to convert the whole thing. They may just pull out 250 or 500, right? And then they'll base it on how old are you now? How much do you want? But it's at the health class you got umpteenth years ago.
Yeah.
Right. As opposed to what would it be now 15, 20, 25 years down the road.
And you're saying they utilize that more of like the death kind of pay. It'll pay for all that stuff.
Right.
So, yeah.
Because then you have your definitive death benefit. If you want to leave, look, the hope is that people become self-insured, right? That you've created enough wealth that you don't need insurance, that if God forbid you pass away, you have enough in your estate to do what you want for your children,
right,
or charities or whatever it
That
is you
makes
want to
sense.
leave money to, right? That's the hope.
It's kind of like you talking earlier, have 3 to 6 months savings.
Right. Right.
You're just giving it away just in case rather than.
Right. And so, it all comes down to what is the purpose of the insurance that you're buying. And there's always going to be somebody out there who's willing to sell you more than you need or more than you want or something you shouldn't really think about.
Yeah.
I love that.
I'm just not like that.
Yeah.
I like that, Stephanie. Thank you.
Thanks. I try.
Okay.
I was a little selfish. I was asking.
I love it. No, I really appreciate you breaking down those 3 policies. Those are the most important. Those are all you do. That's enough. And you are the expert on those 3. And so appreciate you being on. Any final kind of comments, last things? I mean, any little tidbits that we can close on.
If you are doing dental residency, some of the carriers offer discounts. That if you capitalize on and secure a discount early, it stays on your policy forever. And so every dollar of insurance that you purchase becomes discounted. So I always urge folks to do this stuff before they finish training. And for women, you want to get it in place before you try to get pregnant the first time. These disability insurance carriers look for very many reasons not to cover pregnancy. And as a former OBGYN, that stuff's very important to me. So those would be my 2 big final words.
I love that. That's perfect.
Thank you.
Well, folks, if you had any questions about those 3 policies, answered, done, we're good to go. We can move on to the next topic. So thank you so much, Stephanie.
Thank you.
Appreciate you. Your story's cool. And I think we understand the kind of person and salesperson, quote unquote, we've got on the other side. So folks, if you need anything in those 3 departments, Stephanie's your go-to. Her description and resources will be below. So thank you so much. And as always, folks, please subscribe, like, do all the things, review. We appreciate it. And we'll see you on the next pod.
All right. Bye.
Thanks.
Have a great day.
Thank you, guys. Bye-bye.
Bye.
Thanks for listening. Let us know how you like the show. Rate us on Apple and Spotify. Subscribe and follow for more.